We've seen Numeric and what you can do with databases and data warehouses outside of the ERP system. Numeric, what do you add to this, Nathan?
Yeah, of course. Look, keen to go through that today, point out a few key areas within our product that I think are going to be really pivotal and influential for how, folk on this call can really essentially set their team up for scale and really just kind of empower the wider accounting org to become really strategic business partners to the wider business. So I'm just going to start by sharing my screen. And yeah, we've got a poll up there, which would be on Zap. And
Just
yeah,
realized that I hadn't asked the final poll with Rohit. What else would you like to find out about Zap? If there's anything else, please fill in the poll. My apologies, Nathan. I completely forgot.
no worries at all, no worries at all. And yeah, first and foremost, my name's Nathan, as I mentioned earlier. I head up the EMEA sales and go-to-market team over here at Numeric, but I joined in May to kind of really head up our UK and EMEA operations over here. But I've been working with finance and accounting teams for the best part of 6 years now. And frankly speaking, I think it's probably one of the most exciting times to work in the accounting finance org when we think about businesses like Zap, Intact, Accounts IQ, what David's doing over at Mayday. Like there's such a huge kind of change within the market and a lot of exciting tools coming around. And so I think it's really a pivotal moment as we look at kind of adopting software across the board here. Um, I think what's been really interesting for me over kind of like last 6 years of my career, like I'm basically been having the same conversation with accounting and finance teams during that entire period, that fundamentally the work that is sitting on the shoulders of accounting and finance leaders and the team as a whole is growing exponentially. But actually, the headcount and ability to kind of reinvest back into that team is typically flatlining. We work with a lot of businesses that are looking at really kind of purely focusing on growth and revenue being top of mind. And of course, with that complexity, we get more complex revenue streams, reporting needs, intercompany, multi-entity, and typically not a lot of investment to kind of build out that accounting team. This kind of shortage makes it really hard to be able to kind of go and make strategic decisions. And now we're suddenly in a world where AI is everywhere. There is, to be fair, let's be honest, a lot of noise, a lot of hype across the space. But I think we're kind of starting to realize that unless used really cautiously, accurately, and auditably, it's not always moving the needle in terms of speed. And really, as I mentioned, really the accounting finance team should be best poised to become real strategic partners to the business, helping business make better decisions based on that data, based on the close, based on the revenue data that we have in place. But that's simply typically just not possible due to the recurring cycle of periodic closes, quarter over quarter reporting, annual reporting, audits, downloading information from different systems, pivoting in Excel, managing different processes, and posting back into your ERP. It typically really removes the ability for accounting and finance teams to be actually able to work on strategic projects. And look, there's a number of systems across the board, as I mentioned, where it's going from the world of kind of, pen on paper to then Excel, where it's all in documentation. And obviously, there's been a number of systems across the years that really helped automate a lot of that process. But I think what Numeric has really identified is that in order to get to the point where you can build a truly scalable accounting and close process, you really need to take a much more proactive approach to that. And in order to do that, I think what Numeric has really identified is that we need to go and first solve the key underlying data problem that sits within the accounting and finance world, which therefore allows you to kind of start to adopt AI-powered processes, report to a greater level of detail as your business scales, and set your kind of close process up to be a really efficient process on a consistent basis. We work with hundreds of both public and private businesses like Figure and Braze in the public space, all the way down to businesses on Xero and QuickBooks, which are only just kind of starting to go on that really, real high growth journey. And what we really want to do is build a data first platform that's really going to go beyond the close, really kind of start to take into account more and more of your accounting process, whether it be in the pre-close, identifying transactions, monitoring your cash, during the close, automating that workflow, automating reconciliations, and giving you a lot more in detail reporting and analytics by starting to adopt AI. With all of this sitting on top of your ERP and GL structure, to really become a true command module for your accounting workflows, with then the ability to embed AI effectively because it's based on the underlying transactional data layer, which allows you to work really effectively and really scale your accounting and finance team to become true business partners. And now let's just quickly jump into the tool. The way we're really doing that data first approach is by starting with that GL and ERP connection. So to give you a bit of insight, we connect with 4 key GL systems, Xero and QuickBooks, which is probably the most prominent for this group that we see here based on that survey at the start, as well as Sage and Tax, and also NetSuite as well. And what we want to do is connect down to the level where we're not just pulling through your chart of accounts or high-level trial balances. We want to go through and pull every single transaction through on a completely ongoing and real-time basis, where we can pull through all your relevant transaction lines, journal entries, vendor bills, etc., but also pull through all the relevant segments that sit within that GL, whether it be numerous tracking categories, projects, vendors, departments, locations, and essentially really start to mirror your GL with a real-time sync into the Numeric platform, really meaning as soon as a journal has been posted into any of your ERP systems, it can immediately be reflected in the Numeric system that you can therefore use it as a command module to start to create a much more proactive process across the period. And the first kind of step to that, as I mentioned, goes even before we even get to that close process. Typically, we hear one of the key bottlenecks as businesses start to scale is just data inaccuracy. You spend the first couple of days of your close going through transactions, making sure everything's booked correctly, making sure everything is tagged accurately to really ensure that as you start to report up to the wider business, whether that be board investor packs, senior leadership packs, the data is accurate and you can really kind of hold it to account. And therefore also from an audit perspective, know everything is tagged correctly. And this can be a really laborious process for accounting teams, trawling through hundreds, thousands, tens, hundreds of thousands of transactions every single month. There's got to be a better way to do this. So what we're first looking at implementing for teams is a proactive monitoring system, which is really going to alert your team as soon as any anomalies appear on your GL that require attention. Now, this can be as simple as things like large transactions. We typically hear that, hey, any business that has transactions running over $1 million hitting their GL, that probably requires attention and additional sign-off. Prepaid expense policies, ensuring any expenses that hit over your threshold that need accrual. You're notified as soon as they occur, so that work can be done ahead of the close process rather than becoming a bottleneck during the first few days. And things like expenses missing vendors. This is obviously a pretty key part to really ensure that you're able to report on business spend. And so what's important is that by the time you get to the start of your close period, all of your transactions are fully accurate with that tagging to ensure that you can report effectively. So what we want to do is as soon as any of these transaction lines hit any of these monitors, we're going to alert the relevant member of the team that owns that and point them back in the direction of the specific transactions that are causing that monitor to flag. And look, candidly speaking, as I mentioned, when we think about AI, there is a lot of noise in the space and a lot of kind of throwing AI agents at different problems. What we're really looking to take is, I'm just going to go back to another monitor here, actually. Let's go on expenses missing vendors. Is really ensure that any process that is going to be audited and you need to be ensured is running consistently on an ongoing basis. We want to build in a hard-coded rule within the system that you know is going to run consistently on every single transaction over every single period across every single account. And so what we're going to do here for expenses missing vendors is essentially set up a filtering system where if account is equal to 5635 office expenses, but counterparty is empty in this year to date, we want to go through and notify Steph and Tom by email, Slack notification, and then within the Numeric system, that there is a transaction that requires attention. Steph and Tom don't have to go through every single transaction to work out what's right, what's wrong. We can just notify them as soon as something requires attention. Further to that, you're also able to interact with the system using an LLM style model. Businesses get really creative in what monitors they build within the system. And it's actually typically what we find most businesses will iterate on within the Numeric system, most commonly. We typically would set up sort of 5 to 6 key monitors during the onboarding process But actually, we typically find within like sort of 5 to 6 months, businesses are tracking sort of 20 to 30 monitors in the system. This was a key finding we heard when we got to the 6-month review with one of our customers, Notion. They already had over 30 monitors set up because the team had baked in these monitors and proactive process so intrinsically into their day-to-day. They just removed all kind of review once we got to the start of the close period. And what this really allows you to do is not only ensure that all your data is kept clean and accurate, it also really means that with it can therefore start to take much more proactive and detailed report or process to your reporting and analytics. And so this is one of the key constraints. I think Kevin, talked about it with obviously QuickBooks and Xero, where you've got different environments for different subsidiaries. Even within like the NetSuite, obviously you've got challenges when it comes to quite hard to navigate and hard to build reports. But because we have all that data at our disposal, we can build really flexible reports within the numeric system. We're able to pivot, slice and dice, group, and adjust your data into any format that's required within the click of a few buttons. So if we jump into our consolidated income statement by department here, first thing we can do, as you can see, any report can be based on a balance sheet or an income statement format. And you can quickly pivot between it being by a prior month, prior quarter, year to date, and also really decide which entities you want to review for this report. This gets really powerful when you have multiple entities running on whether in different Xero systems or within your single ERP system, because you can really group entities together. So if you're a business that operates across the US as well as Europe, you can have all your European entities grouped together in one report, as well as all other entities within a single report. And also quickly pivot from it being a consolidated or by subsidiary report, really ensuring that any reporting can get down to the level that you're looking at based on your entity structure. From here, we can, of course, increase the number of periods we want to look at and also filter out any specific data sets based on any tag that sits on your GL structure, whether that be account code, counterparty department, or even things in your line memos. So even if it's not a complete phrase, if you're looking for a specific comment within a line memo, you can then base a filter on that to ensure it's either included or excluded, really a moment's notice. From here, we can then also pivot that to really get the data into the relevant format within just a few clicks of the button, with then the ability to click into any of these numbers and again be confident of the data that's coming through, because it's always going to pull you back to the specific transactions that are hitting that report. Can of course restructure in any manner possible, and also add in additional metrics such as gross profit, gross margin, total operating expenses into these reports to really ensure that you've got all the relevant numbers within your reports in Numeric, therefore not needing to export into an Excel-based format, where typically data can become stagnant and require additional manual work as and when things change during the close process. Now, where this gets really powerful is it not only allows you to get your data into a relevant format, but it therefore also allows you to start to analyze the variance on any of these reports. Meaning that when you do start to think about variance analysis, we're not just looking at your income statement. You can also start to look at it on, hey, revenue by product. How do we go assess the variance on that? Software expenses by vendor. How do we ensure that we're tracking the variance across every single vendor on an ongoing basis? But not only that, by selecting it to be recurring within the system, it's then going to create what we call a variance report. And this is where the numeric system really allows you to start adopting AI in the manner where it's really effective, analyzing large data sets and giving you insight into what's going on and the story behind your data. So the view that we see here, I'm sure is relatively familiar for anyone who runs their variance analysis, which will typically either be in something like a ERP system or a Excel-based format. But the key thing here is that the numeric system can fundamentally identify what is sitting in and outside of your material threshold, and therefore loop it back into the relevant close checklist tasks. So the relevant folk are notified to which reports require attention. And as we see through here, we've got all our kind of explanations saved. But the exciting thing here is these are all just initial AI drafts that the system has drafted based on the underlying transaction level data. These are not explanations that anyone has had to go and influence. The system has just immediately spun them off based on the access to all that data we have. Now, of course, that's great. There's a lot of data that sits on a GL, but typically what we find is that the true explanation lives in different systems and also typically in our heads. As I mentioned, the accounting and finance team should be the largest, strategic advisors to the wider business because they're typically the host, owners of most of the data. But because of being held up by manual process, it becomes very hard to do that. So as we open up the drawer here, where we see the closed checklist task on the right, obviously the transaction drawer, where you can see all the relevant transactions within the account. You can immediately analyze the trends and understand the explanations from prior periods of the analysis. Then when we get to the assistant, you can really define exactly what the AI is going to go and take into account to really ensure you feel comfortable with what it's reviewing. You can define what fields it wants to go and review, whether it be class, department, memo, location, how many periods it wants to look at, and of course, prompt the AI in the relevant manner. Meaning that folk can get really creative on what you want to use this AI for. Maybe it's not for actual flux explanation, it's for identifying anomalies, maybe missing accruals or just single level variances. Again, you're not only able to do this on just your month-over-month income statement or balance sheet. You can do this on software expenses by vendor. How do you get an explanation to every single expense, every single revenue product? And even get slightly more creative as well, such as drafting management previews or even writing it up as a poem. What we want to do is just going to click on that there. By clicking the initial generation of the flux, the AI is going to run through every single transaction, all the relevant fields that you've defined it to look at, do the analysis on a month-over-month period, and then run through an initial draft explanation of exactly what is going on within your accounts. And we can see here, obviously, the summaries that's identified that, payroll expenses in the marketing department have increased by 1.62 million, which is 25.6%, which is, of course, the variance we see here and is over the materiality threshold. But of course, we want to add more insight to that, kind of really business understanding as to what's going on. Why has that spend increased? So to that point, we can look at things like prior period explanations, child account explanations, cross-report explanations, but also pull in additional data sets, such as information from a CRM system, a revenue system, a HR system, or in this instance, a payroll system. So we can then compare it. Ooh. Me? I always hate typing in these sorts of environments. But what we've done there is simply added in a headcount data set, where it's then going to go and take the two data sets, compare it, and give you that reasoning here. So we can see that the reason this has increased is because headcount grew by 110 from 110 employees to 115 employees by 4.5%. You can interact with the AI to give it more feedback. It's more nice. Really get the explanations into the level of detail that you're comfortable with, and really use AI to empower the team. The key piece here is that none of this is going to be saved into your closed checklist or to be shared with auditors up until the point the team is confident with that. You can continue to give it feedback, iterate with it, the system will learn from responses, but it critically won't learn from your data. We have a zero data retention policy, which allows public businesses to kind of use Numeric, and therefore you can be confident adding additional data sets into the system with zero risk of the AI being trained on any of that. From here, though, of course, use that explanation. It's then added to the relevant closed checklist log, where it becomes a free text input, so I can come in and manually make any final adjustments and really ensure the human is kept in the loop with every single stage of this accounting process. From here, I can also interact with the wider team, so I can add comments and also add review notes as well, really ensuring that any action required before the period can be closed is added into the relevant close task, really removing noise from things like Excel documents, Slack, Teams, email, centralizing all of these notes within the system. And of course, this becomes really powerful to not only understand more what's going on behind your data, but typically save a lot of time. Airbyte were able to cut nearly 3 days off their close process just by starting to adopt our AI flux analysis, which we launched back in April of 2024. But what becomes even more powerful is that once we have the explanations on an account by account basis, how do we start to give you insights into what's going on over the whole business? You can start to build things like executive summaries for your board level reporting, ensuring that you can really get to this insight within a couple of snapshots and a click of a button using numeric intelligence. Ensuring that we're not having to spend time redrafting, rechecking work. It's all pulled from that single source of data, which will always kind of be your GL and ERP system. Now, of course, from a reconciliation perspective, not only can we manage your balance sheet reconciliations where we compare to different data sources such as PDFs, manual inputs, workbooks from either a Google Sheets or an Excel-based environment, but we can also now monitor your bank accounts as well, really to ensure that your cash transactions are pulling through into Numeric in real time as well. So we can automate a lot of that cash matching process. We just announced this tool alongside our Series B back in November, and it's actually been live with a number of customers, including Brex, DailyPay, Public.com, for the last 5 months. Brex is a great example. They're obviously a fintech payments business, very high transactions. They're now seeing 90% auto matching of their cash transactions to their ERP data with the Numeric system. By our ability to set up very customizable, bespoke rules, which can adopt one-to-one, many-to-one, one-to-many style rules, and also then take any additional manual matches and use AI to auto draft new engines to really ensure that on a month-to-month basis, they're seeing consistent improvements in how much that matching is reducing work. With all this then being wrapped up in, of course, our checklist system, where you can not only track every single task by its preparer, submitter, you can add things like dependent task controls to ensure everything is done in the correct order, subtasks to ensure that everything is done within the relevant order. And again, use really Numeric as a command module for all of that accounting workflow, commentary and review notes. So when it does come to audit season, all of that is logged in a single system. Starburst is a great example where they were able to complete their audit 3 weeks early following on from the implementation of Numeric. And they worked out they saved around 70 hours in terms of that back and forth with auditors. Hey, where's this review note? How did you get to this number? It's all centralized within the Numeric system now. With also the ability, because of all of the data sitting in the system, we can then go and identify key bottleneck areas on your close, rooms for improvement. Kevin made a great point, like technology is not going to solve all of this. Sometimes you are going to have to look at your process, maybe different integrations with different systems, whether it's expenses, AP, revenue. But the great thing is because it's all centralized in Numeric, having to spend time constantly reviewing and working through that evaluation with your team, the Numeric system is going to constantly point you in the direction of how you can iterate and improve your close and accounting process, really to support you to getting down to the fastest close that we can look at. And Kevin, I see you've come off camera. I know we're running short, so I'm more than happy to wrap up now.
We've really run out of time. I think we've got some great comments coming through. Anonymous attendee saying numeric is very impressive, especially in trying to tackle variance analysis, which is difficult for Gen AI and dependent on good bottom level forecasting driver information. And I think that's what's really impressed me. And I was thinking numeric was really the answer to the consolidation process and why that shouldn't be the factor that lets you outgrow, say, zero. But the fact that you've then brought everything in and you've got this AI working on the transactions that, it'll do the basic variance stuff, allowing you, the human, to then go on and ask. I always think with a variance, you've got to say, oh, why is that a variance? Okay. And then you've got to ask the why question again and the why question again. Now, we spend so much time, a lot of the time, just answering the first why. We don't get onto the second, third, or fourth one that gives you the real underlying business reason for it.
Yeah.
Yeah.
No, exactly. And I think like what's really powerful about the Flux tool, because I speak to businesses at various levels of stages of growth, and I think, we hear of a lot of businesses where they're trying to do it, but it's taking sort of, 3-4 days a month just to go through that process. Or equally, they're just not doing it to that level of detail that really their investors, maybe their senior leadership is requiring because it is just too much of a time bottleneck. If we can remove all of that trawling through different data layers, allow AI to do what it's fundamentally very, very good at this point, that analyzing of large data sets, then the accounting and finance team can really add their additional insight and again become more strategic advisors to the wider business. And yeah, we can certainly help with consolidation, reporting, and obviously cash matching and transaction monitoring. But yeah, the Flux, I think, is a great way of really kind of getting to that next level of insight and storytelling behind the numbers.
Now, Nathan, I know you've got to run, and because we're running a bit late, you might not actually make it to the round table at the end. 12 months' time, what do you think's going to be happening?
I think 2026 is going to be really interesting. You made some great points about some new vendors in the space. And as I mentioned at the start of my presentation, I think for everyone in the room today, it's fundamentally the most exciting time to be in accounting and finance. It feels that it's finally having its moment of high investment and change, where systems that have been around for 20, 30 years are starting to be challenged by new players. We've always heard of like, sales tools being invested highly in, go-to-market tools. I think you're right. Over the next year, we're going to start to see a few key leaders coming out. I don't think everyone is going to be jumping on it in the next 12 months because I think we still need to work out who that leader is, because what we first need to evaluate is who's going to be able to kind of deal with the level of complexity that businesses actually need. We think about ERP migrations, transitions. You're only going to do that if it's going to support your business in 10 years' time. And so that's the evaluation you need to make. And I think there's a lot of exciting things that we're working on in Numeric that's going to really support businesses in terms of kind of your journal posting automation, starting to look into that, more into the revenue side of reporting as well. And I think our vision of kind of moving towards being a sort of fully integrated financial data platform is going to be hugely exciting for everyone on this call. But I think what's more exciting is what's going on in 5 years, because I think then we're going to see the real seismic change.
Yeah, I don't think
What
my
everyone's
crystal
day-to-day
ball
looks
goes that
like.
far into the future. Okay,
Yeah,
Nathan,
perfect. Thank you very much,
huge,
Kevin.
huge
Thank you
thanks
to
for
everyone
that.
in the
I thoroughly
call.
enjoyed that.